Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a article that I come across here. Actually haven't been on YouTube here in a while, so like I was saying, I haven't been on YouTube here in a while. Had a bunch of stuff going on. Come across this one: 3 top Dividend Kings to buy for the long haul. And as you can see, this was just released on the 28th. 3 stocks here. I have one of them. One of them has done really well. I've had it for quite a while. But as you all know, kind of in a bear market, just kind of all depends on the day, just kind of ups and downs all over the place. It's been kind of a crazy market for quite a while. But the bear that you see on the side view mirror is closer than it appears some days, just like it says here. I see something going down and I buy a little bit of it, and then you watch it the next day and then it goes down again. It's like, oh, do I buy some more or not? But it's kind of been that way, and this year especially. But for long-term investors who have the ability to see forest through the trees, there are a few paths to take to minimize that risk and create some portfolio stability. One is to latch on to companies that have been consistently increasing annual dividends for over 55 years, or what we call Dividend Kings, providing passive income that can act as a cover during a severely depressed market. And I have quite a few different dividends, and some of them are down, but you're still getting the dividends. Some of them have been decreased a little bit, but they're still paying on some of them. So some of them came back. One that I can think of was Ford finally came back, I think back in January or December, but still have that one. But back to the list here. The first one is on Beckham Dickinson. And if you have any of these, go leave a comment and tell me which ones you have in the comments. It would be interesting to know. So again, Beckham Dickinson Bdx has made a name in the medical supplies, intervention devices, and life sciences by bringing innovative products to market, including the first insulin syringe and the first blood collection tube. Now the company is expanding on the latter through a collaboration with Babson Diagnostics, announced earlier this month. So if you have any more information on that, you can leave that in the comments as well. For those of you that have Beckham Dickinson. New developments in the blood collection and testing system are expected to reduce the number of blood samples necessary for accurate analysis, in addition to the less invasive method and easy-to-use approach. Making it available for at-home use through retail settings, the company expects a more readily available and less invasive option will appeal to patients who may require routine monitoring of care. Here it kind of goes over a chart of what BDX has done in April and the latter part of May. So you can see it kind of had the dip here down to 246, ran up to probably about the 260-ish right there. And so this one's just been kind of up and down. I don't have any of this one. I'm currently at 256.46, so it's up a little bit. I'm assuming this is as of Friday. The market cap is 73 billion. Days range is 252.54 to 256.46. So there's a little bit of play in there if you wanted to trade this one. 52-week range of a low of 229.24 and a high of $280.62. 704,000 shares on the volume. Average volume is 1,180,000. Like I said, I don't have this one. If you have this one, go ahead and leave that in the comments. But BD has been a solid long-haul investment over the past 10 years, resulting in a share price growth of 245%. So not too bad of a growth. And along with the stock price gains, investors have been rewarded with increased annual dividends for 50 consecutive years, making BD a newly appointed Dividend King, or anointed Dividend King. So I think I said appointed, but so again, bailing out of the teetering bear market, investors should think for the long term about BD. You could be rewarded with passive income bought on brought on by those dividends, which can stabilize a portfolio and provide some passive income to help cover the inflationary costs. BD currently pays an annual dividend of $3.48 per share at a 1.4% yield. So you can go ahead and do the math on how many shares you'd have to get to get a free share per year. That'd take quite a few of this one. That'd be a pretty good investment. So next, number 2 is Abbott Laboratories. I've had this one in the past. I might have it in one of my retirement accounts as a partial share. So, but again, Abbott Laboratories, ABT, has been in the news lately, but not for reasons investors want. A recent recall on the closing of an Abbott plant in Michigan have helped lead to a shortage of baby formula, gaining the company negative press. So maybe you can look at that, buy the dip on this one. Again, I don't give tax, legal, or trading advice, just state my opinion. Maybe for those of you that want to get into this one, maybe now would be a good time to take a look at this one. So a short-term good news for investors is that help is on the way in the form of 1.5 million bottles of Nestle's formula shipped under the direction of President Biden. Nestle formula won't help Abbott make money, but it should partially resolve the current issue at hand, empty shelves, and take some of the pressures off of Abbott. Abbott's negative news sent shares lower, but as stores restock, poor press fades, investors will likely take advantage of the stock price dip as things eventually rebound. Here's a look at their chart from April in the last month. It was up and currently at $116.69, $204 billion market cap. Days range, got about $1 play in there. 52-week range, made a little bit, up almost $40 on this one. The low of $104.63, high of $142.60 with a 3,884,000 on the volume. Average is about 5.4. The FDA chief has mentioned that the plant may open as soon as this week, and although Abbott's formula would not find its way to the shelves for up to a month or two, investors will likely see that news as positive, meaning the company may only take a minor shave in revenue. Plus, Abbott isn't a one-trick pony. Its diagnostics and medical devices segments are the biggest revenue driver, which grew organically 35% and 12% respectively during the first quarter of the year-over-year comparison. Combined segments made up 74% of Q1 sales compared to only 16% for nutrition, under which baby formula falls. So the company has seen revenue climb 45% since 2018 and expect high single-digit growth in 2022. In 3 of the 4 segments, its stock and dividend increases have also gone along the ride, up 87% and 67% respectively since 2018. As a dividend king with a payout ratio of 43%, there is reason to believe that the company will sustain those payouts for years to come. Next one is Target. I have Target. I believe I'm up over 100% on this one, so it's done really well, better than Walmart and right up there with Costco, but it's been a pretty good growth one. So, but they're facing a problem of its own, though not much a public relation issue. In the latest earnings call, the chief growth executive officer noted that inflation has led to consumers focusing spend on necessities such as groceries. So, and as we all know, groceries have gone up thanks to gas prices and everything else going up. Thank you to the current administration. So there, I said it. There has been a shift away from the higher margin goods and services. Inventories have built up, leading to discounted sales and sliced margins, resulted in the first quarter operating margin of 5.3%, which stood well below the company's expectations. Comparable store sales grew 3% on a year-over-year basis, which also looks negative from an investor's perspective, after 2 consecutive years of double-digit growth, including 18% last year. But as the market fights through inflation, Target has an opportunity to further evaluate the purchasing needs of consumers in the post-pandemic economy. The first quarter, it saw 4% growth in foot traffic. Although spending habits may have changed to deal with inflation, consumers are still visiting Target stores. This should help the company down the road. So, currently at $167.14. Wow, I didn't know it dropped off that much, but that's quite a bit. So, but again, like I said, if you're looking to get into Target, maybe now's a buying opportunity. Not that I give tax, legal, or trading advice, but you can see the drop-off. So, probably about at the 230, 40-ish range, and just a sharp drop-off there. So, $78 billion market cap, days range of 163.20 to 167, so about a $4 range in there. 52-week range of 145.51 and a high of 268.98. And you can see where it's at right now, so kind of in between, down $100 a share. Volume of 6.3, average volume is 6.1. We'll see what this one does going forward. It's going to go back up, so no doubt in my mind. So as the company digests the shift in consumer spending and inventory works itself out, the annual dividend paid to investors continues to climb as it has for 5 decades. The most recent increase was 32% to 90 cents per share. But before you get too excited about the raise, it's worth noting that the previous 8 years saw an average annual increase of 3.6%. So, something definitely to think about. Be that it may, it's not like Target, the only company fighting the impact of inflation. Primary retail competitors like Walmart also saw dealing with the pain, claiming its own 3% comparison store sales growth year over year for the quarter, after 6% growth last year in Q1 and 18% growth across the previous 2 years' first quarters. Target's revenue and earnings growth, albeit small, should give investors the confidence to be patient. Meanwhile, 38% nosedive in the stock price since April 20th, along with the raised dividend. So Target, so a good opportunity, and makes Target a dividend king worth buying. So, but you can list which out of the 3. So again, we have Target, Abbott Laboratories, and Beckham Dickinson. You can list in the comments which is your favorite. Like I said, I have Target. I do not have the other 2. I believe I have Abbott and like an M1 Finance account, but I'd have to double check on that. But again, haven't been on YouTube here. I've been really busy with a bunch of stuff and some training and everything, so just the weekend to get back to it, and going to be churning out some more videos here, so be watching for those. Probably do some M1J ones, as that's big talk on the channel here. But again, I thank you for everybody watching, and if there's any videos you want me to take, or any stocks you want me to make a video about, leave that in the comments as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing, and hit the bell so you're notified of when the next videos drop. Again, this is J Money, following Forward Financial. Happy trading, happy investing, stay green. Cheers.